Pratap is one of our customers who works in Bharat Electrochem. He's been with his employer for more than 4 years. So has very stable employment. Is not like he's leaving his job and churning. He's salaried, yet when his mother died, for example, for his meeting his funeral expenses, he had to borrow from an informal money lender. And he borrowed at 6% interest rate, right? 6% per month in terms of interest rate.
Hey folks, welcome to First Cheque Portfolio Shorts. My name is Noah Martins and this is a series where we speak to founders of our portfolio companies so that you get to know their team, understand what they're building and the problem they are trying to solve. If you like the content that we've been putting out, do like, share and subscribe so that we can reach more founders and startup enthusiasts like you. Today's very special guest is Srividhya Ramaratnam, co-founder of Findeed. Findeed is a Fintech company hoping to make a difference to the lives of millions of working class Indians by providing them with fair, easy, and quick access to credit. Their vision is to empower financial access for Aspirational India, leveraging the power of data, technology, and community partnerships. I had a really great conversation with Srividhya, and it was genuinely cool to learn about the problem they're solving and the work culture at Findeed. Stick around till the end of the episode to learn more. Srividhya, thank you so much for joining me. It is a pleasure to host you. So let's start by talking about the problem that you're trying to solve at Findeed.
So at Findeed, our vision is to be a holistic, full stack financial services access provider for working class Indians. And primarily, when we say working class Indians, think of anybody that you've seen working in a manufacturing facility, or you walked into a retail store and there is a retail store employee, right? That's your persona or customer that we are trying to solve for. Basically, anybody who makes between 10 to 30,000 rupees a month. That's our target segment of person that we are trying to solve for. And this came from primarily the segment of customers in India constitute close to 60% of Indian households, right? That is almost 160 million people, 160 million households, sorry. But they are dramatically underserved by the formal players. And what happens then is they turn to informal channels. Like, for example, Pratap is one of our customers who works in Bharat Electrochem. He's been with his employer for more than 4 years. So has very stable employment. Is not like he's leaving his job and churning. He's salaried, yet when his mother died, for example, for his meeting his funeral expenses, he had to borrow from an informal money lender. And he borrowed at 6% interest rate, right? 6% per month in terms of interest rate. And the other interest, so this is the kind of customer that we're trying to solve for in terms of enabling them with access to credit. So one is, as I said, we want to be a full stack player. That means not just credit, but evolve to being where we are able to provide them savings, investment options as well. And most importantly, link all three together. For example, you talk to any of your anybody in this kind of a persona or profile, even in an unorganized sector. Let's say even your house help that comes home, or your housekeeping staff, or your security in your college. If you talk to any of these people, you would find that they not only have go to the informal channels for accessing credit, but many of them would also participate, and it's called by different names in most of South India. It's called a cheating, right? Which is called a chit fund. Right. Again, they do that because it's not only about savings, but it's also about when I'm in a time of need and I have a problem, I have access to a larger pool of funds. So this savings linked to credit is a very critical construct for them as well. So for it to be meaningful, all of these three avenues need to come together. And that's what we want to solve for.
That's awesome. All right. And so what's the solution looking like right now? What does the Findeed
that's a very interesting question as well, because that's what we get often asked. Because it's a very large segment, yes. So then why is it so untapped and why is it so underserved? Again, a lot of it is also one, how do we reach this customer? Because their digital footprint still is minimal. They all have smartphones. They're not underbanked thanks to initiatives like Jain and smartphone penetration. They're not underbanked anymore. But at the same time, their online usage and digital footprint is limited. For example, you limited to YouTube because video is there. WhatsApp, of course, is ubiquitous. But you're not going to find this person on Instagram and Facebook and LinkedIn. So then it cannot be just the traditional digital media. How else do we reach the borrower is one with scale and efficiency, because these are small, so from a savings as well as from any product perspective, the unit economics has to work out from a credit perspective as well. So hence, how do you reach the customer with scale and efficiency is one. The second is, if you're looking at lending, how do you assess the customer, right? So here, our fundamental thesis is about leveraging the sense of social capital that these customers have. And that's how they function today in an offline world. For example, when I talked about Pratap and he went to this local moneylender, the moneylender lent because his friend who had borrowed from the moneylender had good repayment behavior with that moneylender. So when the friend sticks a neck out for this person, the moneylender believes, right? So that's a social capital the person is holding. This is also fundamentally the thesis behind microfinance and JLG structures. So the offline thesis exists. Now the question is, how do we bring more data and technology to this so that this can be, captured at scale? And that's where our solution comes in, where we leverage what we call as the power of communities. So we approach the borrowers very differently as well. We approach them through what we call as anchors. So which is where we believe it cannot be just traditional, it has to be a phygital model, where we approach them. The anchor essentially provides us reach. They help us with the assessment of the borrower and help us earn the trust of the customer as well. So that's the anchor's role. Then we look at how well a person is connected to other members within the anchor or in their community. And that becomes that's where our social proprietary model comes into play. And all of these components go into our view of this customer. And that's how we extend our offerings to them.
That's very interesting. And what's the progress so far? How many people are using the platform?
So we currently have 500 community anchors onboarded on the platform. Which has reached to about 35,000 target member base, out of which today 10% of them would have applied on the platform, and we've dispersed loans to about 1,500 folks today.
That's very cool. Let's talk about your team now. Tell me about how you and your co-founder Sriram met, and also talk to me about why people should want to join your team and build Findeed with you. So let me first talk about Sriram and how Sriram and I met. So prior to starting Findeed, I was with Flipkart. At Flipkart, I was heading the Fintech product charter. We launched products like Buy Now Pay Later, the consumer, InsurTech product, the first complete mobile protection product, as well as managed seller financing. And as part of that journey is where I met Sriram. Sriram was with Digit at that point in time and was leading strategic partnerships and ops at Digit. So we really enjoyed our interactions and stayed in touch. And when I was exploring the idea of Findeed, we got talking and he believed in it passionately as well. So we decided to jump together in it. That's how we got started. In terms of why somebody should join our team, my first and foremost answer is, and this is something that I learned from a very good mentor of mine when I was in my Intuit days. First and foremost, the problem that we talked about, you need to believe in it from a passion perspective, right? That somebody really wants to make a meaningful impact, but not for charity. That's not, they would join an NGO. We do believe that there can be, you can make in a capitalistic fashion, meaningful impact. And that's a problem we are trying to solve for. And at the same time, it's a large enough problem. And this is an our vision is also to create something that will last long, right? Somebody should come join us to believe in making this impact and building something out for the long term. And most importantly, ownership. We are a very small team. There are so many problems that we are trying to solve for, from the customer experience to new product and creative constructs that would actually make
a meaningful difference to them, to how do you engage the customer, how do you keep them, gamify it so that finance is not boring, but at the same time, they're meaningfully engaging with us as well. So there are several problems like this to solve for. So somebody can come, own a piece of the puzzle and run with it end to end.
That's really cool. That's awesome. That's the best part about working in a small team, that your contribution
Absolutely.
is actually so important. Yeah. Okay. So I'm going to let you go with one last question. And this is my favorite question to ask. In every founder's journey, I know that there are these highlight reel moments where you have to stop and think about where you have to stop because you realize that you're actually building something cool and something that people care about. So do you have a story maybe about any such moment in your journey with Findeed?
Yes, in fact, so like I mentioned, Pratap, there are enough, and we have quite several of these stories from many customers. And every time we engage with them, is when we realize we are actually making a difference, and how do we do that in a meaningful fashion. But I think what was very, very interesting to us was actually one of our first pilot employers that we went with. Our first repeat customers came from there as well. And that was actually a very eye-opening moment, because these are customers who have, I don't want to name the bank, but they actually have salary accounts with a very large bank, despite that in their first credit line from us. But after COVID last year, a whole bunch of them approached us and said they want our help in terms of a second top-up loan. And this was a employer with extremely good history in terms of helping us with prepayments, right? And the customers said they want to pay off their credit card debts through us. In fact, I was very surprised. I said, why would you do that? You could go convert it to an EMI with them, and it would be a lot cheaper than using us as an option. But as we played it out in terms of the math, it actually was much better for them to take this option, because then they could go settle with the bank. But there are two parts of it that was eye-opening. The customers thought of us first to come and ask, which showed us that we had given them a good experience, and they thought they could actually approach us and we would problem solve with them. So it was very, very nice to know that our customers thought about it that way. And more importantly, even the employer, right? The employer called us and said, hey, can you do something? Can you work with them? They need much larger ticket sizes, and we can figure out we can figure out options to make that, to mitigate the risk further for you. This was also extremely important for us, because this was the first validation of our theses. Because when you go direct to a customer, it's just relationship between us. But also what was important is it gave us, as I said, a reinforcement of our theses, which is about this whole social capital and connection, because these are customers who'd been with the anchor, which is the employer in this case, for long enough that the employer was willing to stick their neck out for this customer and approach us, right? So it validated our hypothesis, not just the fact that an anchor provides us reach and data about the customer, but most importantly, that they have these connections, which help strengthen the risk mitigation. But also importantly, this is when our thesis, again, going back to it, we always said, and like with any other financial player, for a repeat customer, our benefits were going to be higher because you've exhibited good repayment history with us. But this helped us develop our second loan offering to say, how should we think about a repeat customer? What are the benefits that we need to offer to them? So we learned from our customers as well, and kind of situations that we could help them resolve for them.
That's awesome. That's so cool. Srividhya, thank you so much for taking the time to talk to me. It's genuinely cool to see the problem that you're working on. And I love the passion and energy that you have for the problem itself. And I cannot wait to see where this goes in the next 5 to 10 years.
Thank you, Noah. Thanks for taking the time out. And I look forward to interacting with more and more of these founders. And I must say, not necessarily just related to the podcast, it's been awesome working with the First Check team, as well as many of the First Check founders. It's one of the most interactive groups out there in terms of how people exchange ideas, help each other out. It's been a privilege to be part of the group.
Thank you so much. That means a lot. And I'm sure the whole team will appreciate that. Thank you.
Yeah, absolutely. Thank you, Noah.